Hey guys, Eddie Wilson here with the Think Realty podcast. I'm so glad you chose to join us today and give us some time in your day. We always want to provide lots of value to you, and I know we'll do that today with our guest that we have on. But before we get to the guest, I want to say a quick thank you to our podcast sponsor, which is Real Property Management. Real Property Management is a pro in the property management space. If you're not satisfied with your current property manager, I want you to give them a call, or you can also go to realpropertymgt.com and get them to quote your properties. A real good property manager should always put more money in your pocket than take money out, and I know that they will do a great job at that. We highly recommend them, and I want to thank them so much for sponsoring the podcast and always supporting Think Realty and our listeners and followers. Again, go to realpropertymgt.com. That's realpropertymgt.com to learn more. We're going to jump into our guest today. He is no stranger to our podcast. I've done a Titan Talk with him. He's a resident expert. This guy's been around the space quite a bit. He speaks to our crowd a lot. And so our guest is Robert Knight today. Robert, thank you so much for joining us.
Awesome. Thanks for having me.
Yeah. If you haven't watched Robert, Robert is our Titan of Build to Rent Southwest Florida. I think that was what the title was.
Yeah.
But anyways, I love it. So you've had quite the year.
Yeah.
You literally went through a hurricane. You went through economic downturns, rate volatility. Like it's been kind of a crazy ride.
Yeah.
Things still sunny in Cape Coral though?
You know what? I sat there. We had the hurricane literally the eye went right over our house.
Yeah.
And it was I wouldn't stay in a hurricane of that magnitude again, but
you wouldn't?
We stayed this time here.
Was this your first one?
It was my first one. So
okay.
Yeah, so that's they say when you go through one of those kind of major hurricanes, that's your certification as a true Floridian.
You're Florida. Yeah.
Yeah. So
I heard that they actually throw parties in Florida for hurricanes. Is this true?
Yeah. It is true. It is true. And it wasn't so much the winds, but the flooding that came in.
Yeah.
Was something they say from a 500 to 1,000 year event. So it was.
Wow.
It was really crazy. So, we got done on the next day. I walk out and I look at the devastation in our city, and I thought, wow, this is going to take some time to get fixed. Mm-hmm. But they worked so fast to fix things. The governor came in and just started taking action. And
it took him how long to rebuild the bridge to Sanibel? Wasn't it like 2 days or it was something crazy?
Yeah, that was actually the Matt Lachey to Pine Island. He did it in 3 days. 3 days. And it took him 3 weeks to do the Sanibel one, which nobody ever thought that they could do it that fast.
Incredible.
And so, I looked around at all the devastation, and the immediate thing came to me: what are we going to have for opportunity in terms of just rehab properties?
Sure.
So there's that whole aspect that's come around on top of the great new construction stuff that we're doing there.
Right.
I jumped back into the rehabbing game. I started off in the rehabbing game with home investors and found myself back in it again in the last year, which has been kind of fun.
Chasing some opportunity.
Yeah, what can you do? And when some of those kind of things happen, you just have to pivot, look for what kind of opportunities God's putting in before you. And,
that's awesome.
And go for it.
Are there still a lot of distressed hurricane-affected housing in Cape Coral today? It's
amazing. Like, especially if you go down into that southeast area that was built, because Cape Coral is only 1957 in terms of the city initially being built, and so your older houses down there in that era there in the southeast, they were built in the 50s, 60s, 70s. Those guys, the elevation that we were required to build up back then was so much lower that they ended up with 2 feet of water in there.
Sure.
And it's one of those 500 to 1,000 year events. Maybe we'll never see it again in our lifetime, but that's what happened. And so there's still a good amount of property in there, and you can literally see it out on the MLS. You get on the MLS and you'll go through some of the pictures and you'll see 2 feet from the ground. It's all just been gutted out.
Yeah.
So
interesting. So there's still a lot of opportunity there with rehabs.
There are, and you know what? Even some of those properties, the nicest locations you could find Gulf access, where you're just a minute out to the Gulf, we've been purchasing some of those, knocking the house down, and we're building. I've got 5 really nice luxury houses that are going to exit at $3 million that we're doing with investors.
That's awesome.
And I wouldn't have imagined doing that one as well. That
right.
wasn't a whole nother, our business model, our bread and butter is really working with build to rent, kind of long-term rentals, Airbnbs, and here we are doing some super high-end homes down there as well.
That's awesome.
Which will be fun.
Very, very cool. So you went through the hurricane, made it out okay. I actually moved to Jacksonville, right? You know that, but a lot of our listeners might not. But I moved over the border into Florida. Got like a 6% raise, because no state tax. But anyway, so Joe, you should try it. You can get a raise by moving to Florida. Shayla, you too. And but it's been interesting because I went through a hurricane too. Did you know this?
No.
Yeah, I was like a category 1.
Okay.
Yeah, category 1. Yours is like category like 4 or 5 or something like that. Category 17.
I think it was really 5, but they didn't declare it as 5.
So I was not sure what to do. I live in Georgia, and so my staff and I say, guys, should we have meetings during the hurricane? And they're like, oh no, it's terrifying. Like hurricanes are horrible. And so my experience was very different than yours. Like it was a hurricane category 1. And which basically is just a slightly louder thunderstorm, like that lasts for about an hour, And so we had meetings during the hurricane, and then all of a sudden the sky like turned sunny. I was like, "Is that it? Like, is this over? Like, this is what everybody's scared of, But anyways, I think my first hurricane was way different than your first hurricane, but
and it was really strange. We drove up an hour or 2 north of us to get supplies and things like that because we couldn't even get gas.
Right.
It was an entirely different experience there as well.
It's crazy. Just runs right through that area. Yeah. It's amazing. So Robert has built some homes for me down there. And mine, thankfully, I think we lost a shingle or 2 and maybe a small palm tree. But that's all but again, because of, the elevation we're building at and all of that, the water came out of the canal, but not even close to the home to flood it, So big difference for sure.
And I've used yours. The morning after I drove over to your house just to see what it looked like because I thought I got to make sure Eddie's house is looking good here. And there was a little bit of debris and stuff in the yard that had been blown around, but nothing had happened.
Not a big deal.
That's fantastic. And I've actually, used that as an example that you can be in a flood zone, Gulf access, and have no issues whatsoever.
Right. Yeah, I pay a premium for flood insurance, and I began to wonder if I actually need it after that. I was like, the worst possible event in 500 years. Do I actually need to pay this flood insurance? Anyways, But the blessing of that is mine's a short-term rental, and so it's been booked solid since that day because all the people that are working down there need a place to stay. So it's been booked completely solid. Well, very good. So if you got a crystal ball, I'd like for you to kind of share your prediction with me, because I look at what's going on. You got Feds raising rates again. Today went up another 0.25%. We have banks failing. We have just these weird economic things happening. They think they have inflation under control, and then the numbers come out, and we don't, and it's like we're just all over the place. And Florida still stays hot. Like from Jacksonville down to Cape Coral to Miami, there's still a lack of housing. Houses are still, even $1 million houses, $2 or $3 million houses are on the market for less than 30 days. You have so much flight from all around the country into Florida. Is Florida, I know I'm asking you to kind of predict, but it's like, does Florida just weather all of this and we don't have any, we have very little issues?
Yeah. I like the term inflation resistant. I don't think there is an inflation proof depending on what we go through.
Sure.
But to me, when you look at this whole time of inflation, you have to put your money in something that's a hard asset.
Right.
And you have to choose if you're going to be in a hard asset, where do you want to be?
Right.
And I agree with you. I think Florida is that place to put your hard asset, and it's all about supply and demand, and the number of people that are moving into our area isn't changing.
Sure.
It's just it's unbelievable, and we don't have the housing. We even when I look at my statistics, I go back every month through all of this and say what's going to happen. I'm just waiting for the big surprise, and of course we've seen year over year there are some softening and so forth, but we're still 29 days to sell a house.
Wow.
We still are at 4 months and 2 weeks for for all of our inventory.
Yeah.
So a balanced market is 6 months. So we're still in a very healthy market right now.
Right.
We're still seeing year-over-year appreciation.
A very healthy seller market. Like buyer's
exactly.
market is tough,
Yeah.
but still seeing appreciation.
Yeah, we're still seeing appreciation. And the other thing I'm seeing too, when I look at not just year over year, I look at from the beginning of the year until now, all the stats are improving.
Yeah.
So I see everything is getting better over the last 3 months.
Right.
And that just tells me that a lot of investors are probably saying to themselves, okay, the Fed's probably done. Redfin's saying that we're going to be at 6% interest by the end of the year.
Yeah.
I think when we get to 6% interest,
it's a frenzy.
It's going to be a frenzy because there's so much money on the sideline.
Right.
They've all been waiting, and I think smart investors over the next 4 months start to come back in, and they pick up the deals that are available right now.
Right.
I mean, we have land that's softened in terms of pricing. I can get people discounts on land right now that I couldn't have got before.
Right.
I can get them locations. It's a little easier to negotiate with some of the people.
Right.
And we have some rehab deals that are available. That I've done several fourplexes in the last few months. I've done a number of different single-family homes. Each of the single-family homes, even after I've done the wholesale fee that we've taken as an assignment, we've still left 100K gross margin for our investors.
Sure.
Which I think, any way you look at that, if you can put 100K in your pocket, you're doing great.
Yeah. Yeah, it's really interesting because it doesn't seem like it's softening, but it's not slowing. Like the velocity is still there.
Yep.
There's areas all over Florida that are still being highly developed. So I read something by D.R. Horton the other day, and they said that in every other state except for the state of Florida, they're going to deposit only builds, right? So they're not building any spec homes except for the state of Florida, right? So it's like you take the largest home builder in America, and even they're saying, well, we'll double down on Florida. It's like, so you look at these, there's all these economic indicators that say, if you're going to take risk,
that's the place to do it.
It's the place to do it. But the thing is is it truly risk? It's actually seems way more risky to, number one, keep too much cash in a high inflationary market because your cash is eroding. But number two, when banks are failing, the answer to failing banks is also putting your money in hard assets. In the end, these assets will stand the test of time. The people that had money in their hard assets during the Great Depression were the ones that came out wealthy in the end. The people that had their money in banks and the stock market were the ones that got crushed.
Right.
And so the real estate always is the recession resistant model. It always is,
Right.
And so, no matter where we go, no matter what the Fed does, no matter what Jerome Powell does, and I kind of think, I don't have a crystal ball either, but it's like, we have to be close to the top. Like we have to be. I think now that banks are failing, the Federal Reserve is also getting nervous to raise the rates too much because it could affect how the banking industry is perceived,
right?
How well the banks can actually, if all of a sudden the banks can't lend because interest rates are too high, you literally cut off their largest potential for earning. And then if they can't earn and they publish losses, then all of a sudden you've got another run on the banks.
Snowball, yeah.
And so it's a snowball that I think the Fed goes, we could be responsible for all of this,
Right.
And I think it's interesting. I think we'll level off, and I think once inflation numbers get into check, then I think we have maybe a Redfin or others that have predicted a rate softening or getting back down into the sixes or low sixes would be a reasonable place for us to land. I 100% agree. The economics tell us that. I mean, it's like there is still high demand right now when rates are high. There's still low supply with high demand, right? Like you pointed it out. And nationwide, it's not just a Florida thing, but nationwide, we know that 6 months of inventory is a healthy marketplace.
Yep.
Nationwide, we're just over 3 months, and so Florida, it's even less. We're in the 2s or whatever it is, but it's so interesting. So how about multifamily? I mean, you've spent so much time in single family. What's your multifamily outlook? Is multifamily going to be the asset that continues to bail out all of this demand because we don't have enough single family housing?
Yeah, no, I think it definitely is. And just to throw one other thing out there, I was just recently on the phone with a hedge fund, and I asked them the question, because these guys have mega cash to buy. I said, are you guys really worried about interest rates and the economy that we're in? They said, absolutely not. We love it.
Right.
They said the higher the interest rates, the better.
Sure, absolutely.
I said, really? Explain that to me. The higher the interest rates, the better. I think the opposite.
Sure.
They said, no, we're buying everything at a discount right now.
Absolutely,
we're shaking out all the small investors.
Absolutely.
And the opportunity sitting there for us, because our horizon is bigger than what's happening next year. We're looking at a 3-year and a 5-year horizon.
Right.
And I thought, wow, if we can just think like these bigger guys, and they're super bullish on the multifamily, and they talking with these guys, they're basically saying to me, any deal flow you can get. I've talked with multiple in the last few months, and they're looking for sponsors like ourselves who can keep bringing new multifamily deals for them in Florida. So I think it does, and I think. As there's a lot more pressure and people are unable to purchase homes, multifamily just benefits from it every time. So.
Yeah, because I mean, these people need a place to live, and our population is growing. It's continuing to grow, and we're not servicing our population with housing, especially workforce housing. It's just not there.
To me, the other big thing that was, we look back at 2008, a lot of these builders all went out of business, right, and never came back.
Right.
And they say we have a $6.5 million deficit in terms of our housing inventory. Yeah. And you need 1.8 million every year to keep up with just the population growth.
Population growth, right.
Right? Yeah. And we did, I think, 1.5 million last year.
Yeah.
And so for the last 15 years, we haven't kept up with it. Yeah. And so I don't know. I still think that we've actually got a really good run to go with new construction because of that.
Right. I've read that so much. It's like just about 6.5 million homes underbuilt. That's our deficit. We did just like 1.49 million or something like that, 1.5 million last year. You're right at it. Yeah. And then this year, based on building permits being pulled, we may only build like 1.2 to 1.3 million homes this year. So we're even reducing that. Yep. The deficit is growing, However, I do think multifamily is where that's how you service the vacuum, because a family that can't, or especially young singles or young married couples, yes, they may love to go buy a new house or buy a house, but in the end, they're okay with an apartment if that's all they can get, and they will settle there. And then there's, you still got this tail of millennials that don't want to own, that are totally okay with just convenience and location. Yep. And then the next generation, who knows what they do, but it's coming on fast. And so, super, super interesting. And then not enough baby boomers leaving their houses. That's another stat that I keep hearing is like they expected this massive baby boomer flight out of their single family homes. But with COVID and everything going on with the economy, they're all almost like nervous, and so they're just holding up in this asset. So all these homes that we thought were going to come on the market from baby boomers are just not coming on the market, and so we don't know when that flood comes. Does that flood come in 2, 3, 5, 10 years? It may not. It may just be this slow trickle that we just absorb into this massive deficit that we have. We never even feel that. Right. Interesting. So how are you? You still feeling pretty bullish on the marketplace? You still pushing forward? Yeah, no, absolutely. We're still looking for some new land. We're looking to do some build to rent communities. We want to move into that. We did find another waterfront property that we recently started some due diligence on as well. Yeah, very cool. Similar to the one that we're doing. Yeah. We're super bullish. You've got a big waterfront property that I'm involved in. You've got a big apartment complex, which you're involved in as well. Yep, I'm involved in, which is like over 300 units, right? And that one's a little less. It's 152 units. 152. Okay, yeah. Yep. So it's still a big one, Class A. And then another potential waterfront one, huh? That's great. Yeah, and we're looking at several built-to-rent communities, which either be single-family home communities or some townhouses and things like that. Well, cool. Well, as we come to a close, how can our viewers, listeners get involved with you, and what ways can they get involved with you? If they're a passive investor, they want to just invest passively, or maybe they're more active. How do they participate? Yeah, we've got a full spectrum of ways to get involved. We have
quite a few direct investors who we're just helping them build single-family homes,
Right.
kind of like we did for you. And we have
And
opportunities.
you're currently building 8 for me. So
Right,
yeah.
right, exactly.
Yeah.
And we also have syndications where people can, invest in either that multifamily 152 units,
Right.
And other opportunities that we have coming up. And we're starting as well a single family home fund,
Okay.
where people can get involved in that, and
That's
that's
great.
super exciting and has
That's awesome.
lots of returns. And
Yeah.
would love to have you into that one
Yeah.
as well with us as well.
Why not? Why not? I'm fully invested. So they can find you at White Stone. On White Stone, is it White Stone Developments on social, or how do they find you?
It's White Stone. Well, if you on our website's White Stone Developments LLC.com, just get on there. Request a time. We can book a Zoom call. Let you know some of the opportunities we have,
Yeah.
and we'd love to meet with you.
Yeah, one of the last hot places in Florida. You know, more. I use the term you always say. It's got more miles of canals than Venice, Italy. You know,
Yeah.
it's a beautiful, beautiful place.
It's amazing. It
Yeah.
really is.
I'm building out, everything I've got in Jacksonville, but I certainly could see myself at some point, migrating that way. It's such a beautiful place.
We'd love to have you down
Yeah,
there.
yeah, very cool. Thanks for being a part of the show.
Thank you.
Yep.
Appreciate it.
Think Realty, thank you so much for being a part of the show today. Please let us know some feedback. What did you like about the show? What do you want to hear more of? If you haven't connected with Robert and his team, make sure you get on there. You can also find videos of him on Think Realty and other places. He's been speaking at our events for quite a few years now. And then also, I want to say a quick thank you to our podcast sponsor, which is Real Property Management. Real Property Management puts more money in your pocket than taking it out. And that's what a good property management company does. If you don't want to self-manage or you're not happy with your current manager, give them a try. Go to Real Property MGT. That's realpropertymgt.com. If you haven't bought your Tampa, Florida tickets, we've got our Think Realty conference coming up July 13th and 14th in Tampa. Use the code PODCAST and it gives you a buy one, get one free. Grab a friend, grab your spouse, whatever it is. Grab a son or daughter. That's what I do. I take my kids to events like this because I want them to learn real estate. And bring them with you. That's why we do the buy one, get one sale, but use the code PODCAST to do that. Tampa is one of the hottest markets in Florida right now. It's one of the top 5 markets everybody's investing in, not just in Florida, but nationwide. And we're holding the conference there because it's a fantastic market to travel to, but it's also a great market to invest in. And we've got capital, we've got deals, we've got resident experts there. You're going to have a blast and learn a lot about real estate. So make sure you join us. You can go to thinkrealty.com. And click the events link and then hit up Tampa. We'd love to see you there. Thank you so much for joining us on the day. Have a great day.